everyone, and welcome to our Smart Women Savvy Money webinar series. We've been hosting our webinars for 7 years with the intention of really creating a culture and environment in a safe and secure manner to bring more women into feeling confident about making better decisions so they can create the lifestyle they desire and deserve. We cover all types of topics: inspirational, financial, obviously, but lifestyle related issues. Today, we have a great speaker. Now, we all are at home. And guess what? You've had to appreciate being in your home, but you know, your home has a lot of other features that our speaker, Janice Cohen, is going to talk to you about today for a few reasons. One is that particularly those who are in retirement or close to retirement, you really want to look at what are some options that you have because of this market volatility. It might have impacted your investment assets that are going to be able to provide you with income during your retirement. Well, guess what? There's a backup plan. And that's what Janice is going to talk to us about. We've been working with Janice for a number of years. She has been amazing in helping a number of our clients to figure out an alternative or a supplement plan. She's been in the business as a reverse mortgage expert for over 15 years. And the intention is really to assist seniors to figure out what are their best means of providing retirement income. Now, she has actually gone in, and I love her because she's even told some people, you know, this is probably not the best idea for you. You might want to consider doing XYZ. So she's not a salesperson. She is really focused on helping you. So with that said, turn it over to Janice. Thanks, Janice.
Thank you so much, Renee. And I really do, I consider myself a teller, not a seller. And I come from a teaching background, so this works out great for me. As Renee mentioned, I'm a reverse mortgage specialist, and I'm with Mutual of Omaha. Mutual of Omaha acquired our boutique reverse mortgage company about 2 years ago. And before that, I had been with Wells Fargo, I had been with MetLife, but there was a period where there were only boutique firms that were even offering reverse mortgages. And now Mutual of Omaha is the first one to come back into the space. And I'm very, very happy to be affiliated with such a reputable company and such a recognizable name. And people remember the shows that used to be on, the Animal Kingdom. And I remember I used to love watching those shows. So I love Mutual of Omaha.
And actually, that's where I started when I first came into the financial services industry. That was my first job, was with Mutual of Omaha.
Wow.
Yeah.
See, it's a terrific company. They knew a superstar when they saw one in you, Renee. So as Renee said, I really do approach reverse mortgages when as someone who wants to help a person analyze their home equity position. And I certainly don't think it's right for everyone, but there are a lot of people who come to me for information, and it's a perfect fit for some of those people. But we look and see, you know, what are your other assets, and is it a good time to utilize those assets, or do you want to leave them in place? You know, a lot of folks have experienced some market volatility right now. I would say most people, if not all, are experiencing some market volatility with the investments that they have, with the money that they've put away. And nobody wants to, you know, kind of have to take that money out right now, especially if, you know, your investments are down a little bit. You want to wait until they come back up, which they will, especially when you have a wonderful financial planner like Renee. But I've been doing this for 15 years, so I've seen it all, and I believe very, very strongly in this program. I think it's helped a lot of people. So we talk about 3 L's. Longevity. Your money has to, hopefully, it will outlive you. There was an old saying someone once told me, you know, that you want to bounce the last check you write before you pass away. And I think that sounds like a perfect solution, but of course, my crystal ball is broken, so is yours. So we don't know how long will we need that money. So ideally, we want to have a few cents left over after we write that last check. And of course, whatever your lifestyle needs are will determine how long that money will last you. Your lifestyle, will you have enough money to maintain your standard of living? Well, you know, some people, when they first retire, they're just living in their homes or watching a little TV, placing a few orders on Amazon.com, playing maybe some bridge online. But then what if you have something terrible happen medically and you need to have someone come into your home? That lifestyle becomes a lot more expensive. Liquidity. Will I have access to tax advantage money when I need it? It's great to buy life insurance for your family, but if you need those funds to have a better retirement or to be able to afford your lifestyle, you want to know that you have liquidity. So reverse mortgages, we'll talk a little bit about how they work, what are the myths versus the facts, because I'm sure many of you have heard myths, and I can hopefully put your minds at ease. And we'll talk about the different uses and benefits as well. So a lot of people come to me and they want to know what will happen to my home vis-a-vis my heirs when I pass away. And I often tell them, your heirs can take over ownership of your home if they can pay off your existing reverse mortgage, either through doing a refinance of their own or paying cash, or if you've had some life insurance that you've passed on to them, they can retain ownership to the home. A reverse mortgage is a low-risk government-insured loan. It's non-recourse, meaning that even if the value of the home should drop, you will not have to, or your heirs will not have to bring more than what they could sell the house for in order to settle your estate. So if you get a lump sum of cash of, let's say, $400,000, your house is now worth somehow less than that, you're in a very good position because it's an insured loan, and the FHA will cover the gap between what you owe and what the house can be sold for. They're non-taxable funds. This is not income. This is return of equity. So you've already paid taxes on the money that we're going to be lending to you, so you don't have to worry about paying taxes on that money. You can use the funds however you choose. When you have a good financial planner, that person will help you to make important decisions regarding any money that you have coming in from a reverse mortgage. There are no prepayment penalties. If you do a reverse mortgage and 2 years later you decide to sell your home, you're free to do that. It is illegal for there to be a reverse mortgage with prepayment penalties. So just know there is no such thing as a reverse mortgage with prepayment penalties. And the line of credit that you will receive grows over time. So let's say, for instance, that you have a line of credit of $300,000. That loan is going to grow at the same rate that borrowed money would be charged interest. So let's say, for instance, it's 4%. You're going to be charged interest on borrowed money at 4%, and your line of credit is going to grow every year by 4%. So where you might begin your reverse mortgage with a $300,000 line of credit, after 1 year, you may have $340,000 in a line of credit because the line of credit is growing, which is terrific because you're getting older and your need for more money is going to be increasing as well. Some common uses for a reverse mortgage: to purchase a home. A lot of people don't think of purchasing a home using a reverse mortgage, but if your home in which you've been living for many, many, many years is no longer suitable to your lifestyle, if it's a townhouse, it's got multiple floors, it has, there could be a number of reasons, why it doesn't make sense for you to remain there anymore. Maybe it's the living area is on the first floor and there's no bathroom on the first floor. Could be a whole host of reasons, but you can use a reverse mortgage to purchase a home You put down approximately 50% of the purchase price of the home, and the other 50% is financed in the form of a reverse mortgage, upon which there are no payments that are ever expected or required. So it almost feels like owning your home free and clear. You do have a mortgage on it, but no payments are ever expected or required. You do have to make your payments on your taxes and your homeowner's insurance. You can consolidate debt or pay off other debt. Some credit card debt can be very expensive debt. And of course, it's not deductible debt. It is, and it compounds, and it's just not if there's a way to consolidate debt so that you no longer have to make payments on it, this is a great way to do that. You can supplement your monthly income. Let's say you really find yourself only about $700 short every month, or even $1,200 or $400. You do not have to take any particular amount of money monthly. You can choose whatever works for you, just so you're not in the red each month. You can use it as a retirement planning tool. Some people like to open up a line of credit. They don't touch it until they see a bear market, like the kind of market we have right now, and then they want to start using the reverse mortgage loan proceeds only at that time until the market comes back up. Remodeling, home repair or maintenance. Your home is in many cases, your biggest asset that you have. And so you want to take care of it. It's protecting that investment that you have. Healthcare costs and prescriptions. Getting older, even under the best of circumstances, is expensive. So this can help you get the top flight care that you need. Defer draws against Social Security income. The longer you wait to start collecting Social Security, the higher your monthly income from Social Security will be. So you can defer those draws and use the reverse mortgage in between until you're ready to start drawing Social Security. Long-term and in-home care. Many people, I would say most people, do not have, even if they do have a long-term care policy, it's not adequate to cover all of their long-term care costs. So this is a way, even if you have long-term care insurance, this is a great way to supplement that long-term care insurance. Create a cash reserve for emergencies. How many of us are driving around in cars that periodically need maintenance or even an overhaul, or if the car dies and you need to buy a new car and maybe you don't feel like you can really handle or want to handle $400 a month to pay for a new car? You can use a reverse mortgage to purchase a new car if you need a new car. Something happens to the roof, same thing. You can take a draw. You can take a $10,000 draw, put a new roof on your house, whatever you need to utilize it for. Funds for travel and recreation. A lot of us are so focused on hoarding money so that we feel safe that we don't spend it and enjoy our lives as much as we can or should. And while we know we're in very strange times right now, in the not so distant future, you'll want to travel again. You'll want to visit family. And this is a great way to do it. I once had a client who said, I was invited to a family reunion, but I just don't want to fill my car with gas. And I thought, wow, this is going to be life-changing for someone like her, just to not have to worry about something like filling your car with gas for a couple of trips back and forth to see family. A reverse mortgage. It's a unique loan that enables seniors 62 or over to access equity in their homes without having to sell the home, give up title, or make monthly payments. You never, ever give up title to your home when you do a reverse mortgage. That's so important to know. Many years ago, there were, and when I say many years, I'm talking really about over 20 years ago, I used to hear about equity sharing programs. People would call themselves reverse mortgage companies, or companies would call themselves reverse mortgage companies, and they would put themselves on title with a senior and lend them money. That is not a real reverse mortgage. It's certainly not the FHA insured reverse mortgage. And it's one of the reasons the FHA did get involved with a reverse mortgage was to protect seniors from companies that were less than ethical. And as a reminder, people who don't make monthly payments on a reverse mortgage, as we know you don't have to, you still are responsible for the real estate taxes and homeowners insurance and HOA fees if you have them. So in order to be eligible for a reverse mortgage, you have to be 62 or over. The home has to be your primary residence. And there is financial assessment. We do look to see that you've been on time with your mortgage payments in the past, taxes. Now, some people haven't always had the capacity to be on time with these types of payments. We can help with that in terms of opening an impound account or an escrow account, regarding, depending on where you are in the country, it's called different things. But we can even help by taking over the payments for the taxes and insurance. So just because even if you have a spotty credit history, we can work with you. Borrower responsibility: if you're living in the home, you're paying the taxes, homeowners insurance, HOA fees if applicable. And how much you can borrow depends on your date of birth. The older you are, the more money you can borrow. The younger you are, the less. So if you're just 62, maybe you're going to be able to borrow about 47% of the appraised value of your house. But if you're 90, you're going to be able to borrow maybe 70% of the appraised value of your house. So what your birthday is determines how much you can borrow. And you can receive the reverse mortgage proceeds either in a lump sum, monthly income for the rest of your life, or a line of credit, whatever works best for you. And, excuse me, you can even divide up. You can say, well, I want $20,000 in a lump sum. I want $1,200 a month in monthly income and a line of credit of $50,000. We can certainly do that. So it's a very flexible program. Anyone who does a reverse mortgage is told through in a variety of ways, not the least of which is by me and the documents that we share with our clients, but also in a counseling session with a representative from the Federal Housing Administration, that these loans are non-recourse, which means that even should the value of the house drop, you will never, nor will your heirs ever, have to bring funds to get out of a reverse mortgage. Bring funds above and beyond what the house can sell for. So if you, as I mentioned earlier, if you have $400,000 that you've borrowed on your reverse mortgage and the home value has gone down to about $380,000, if you sell it for $380,000, the reverse mortgage is considered paid in full. You remain the owner of your home as long as it is your primary residence. No one is going to take the house away from you, not at the time that you initiate the reverse mortgage and not at the time that you pass away. The home is always going to belong to you, and when you pass away, it's going to go to your heirs. Your children or your heirs are always going to receive all of the equity that remains in the house once the existing reverse mortgage is paid off upon your demise. And as I mentioned, there's third-party counseling that's mandatory before you can do a reverse mortgage application, and that's with a representative from the Federal Housing Administration. You're offered a credit line with a reverse mortgage. If you elect your credit line, that exists indefinitely for as long as you live in your home. You may have heard on the news recently, and I'm sure Renee has been on top of this, Chase, Bank of America, they are freezing their lines of credit. They are pulling applications. They are no longer accepting lines of credit. It's upsetting because people who maybe became a little afraid when the market volatility began thought, okay, let me apply for a line of credit. I'll have some emergency funds. A lot of the big banks are not offering that right now. And your line of credit grows regardless of the home value. So if you do a line of credit As I mentioned earlier, it grows at the same rate that borrowed money is charged interest. And even if your home value is sinking, your line of credit value is growing. So the potentially borrowed money is increasing all the time. Okay. Okay, myths versus fact. Myth number one, the lender is on title or owns the home. Nope, nobody is going to own your home. It's a regular mortgage. It's a non-conforming mortgage, non-traditional mortgage, in the sense that you're never making payments. And what does that mean for you? It means this is, it's an easier mortgage to qualify for. We're not taking a look under the microscope to see what's your income, what are your expenses. We do a little bit of that. But when you purchase a home or when you apply for a refinance, you are basically examined top to tail. They want to know everything. If you've got an unexplained deposit into your checking account, you've got to write a letter of explanation. It is so involved. It's not nearly as involved with a reverse mortgage because you're the homeowner and we're really depending on the equity, not your income, to qualify you for the reverse mortgage. Funds received from a reverse mortgage are taxed. No, they're not. It's a non-taxable event, and that is because, if you remember, this is not income. It is return of equity. You already paid taxes on the money that you used to purchase your home. The fees on a reverse mortgage are too high. Well, the fees on a reverse mortgage are higher than on a traditional refinance or purchase money loan. However, they are lower than they were in the past, and there are several different programs. I have a program right now. The only fee is the third-party title and escrow, and that's it. So there are ways that we can work with you to find a program that you find to be acceptable, whether it's the interest rate, whether it's the third-party fees, we'll make it work. Myth number 4, reverse mortgages include equity share. They never include equity share. There are equity share mortgages out there, but a reverse mortgage, a true reverse mortgage, is not an equity share. Myth number 5, reverse mortgages are risky and the funds are not guaranteed if something happens to the lender. This is certainly a myth. This has been in the reverse mortgages through the Federal Housing Administration have been in place since 1988. Because this is a loan for seniors, it is the most regulated loan in the country. And it's FHA insured, and it is constantly revamped and overseen, and it is certainly really closely scrutinized to make sure that we are always doing the best that we can for our clients, who are all seniors. Myth number 6, borrower can end up owning more than the house is worth. As we already discussed, this is a non-recourse loan. So if the house value, for whatever reason, goes down and the loan balance is higher than the value, the sale of the house will satisfy the reverse mortgage, or your heirs can purchase the house at 95% of the appraised value. So that's another, which is obviously letting them have the house, even though the mortgage is underwater. The bank wants to work with families that want to keep the house in the family. Myth number 7, when the reverse mortgage becomes due, either the lender takes the house or the heirs lose their inheritance. There is nothing further from the truth. I like to tell people, Mutual of Omaha has plenty of office space. We are not looking to take people's houses. And if you ask any person who's in the mortgage industry, they will tell you the last thing a lender ever wants to do is to foreclose on a home. When something happens to you or your parents, the heir will call the servicer of the reverse mortgage and begin making arrangements for the reverse mortgage to be paid off. If a borrower outlives their life expectancy, the lender will kick them out of their home. False, false, false. You can never be kicked out of your home, even if you live till 120. In fact, I did a reverse mortgage for a lady who lived to be 107 years old. She had signed up for monthly income. I did the reverse mortgage application for her when she was about 98. Her great-granddaughter was her power of attorney. She lived in her home till 107. She had opted for monthly income for the rest of her life, and she received that monthly income to pay for her in-home care. So no one's going to kick you out of your house. Myth number 9, you can never get out of a reverse mortgage. Not true. If you want to sell your home, if you want to apply for another type of mortgage to extinguish your reverse mortgage, you can do that, and there are no prepayment penalties. It will not impact your Social Security or Medicare benefits. In fact, I have even worked with clients who had low-income oil heat assistance, and it didn't even affect them. I've worked with clients who've had low-income prescription assistance, and it didn't affect them. So regular Social Security and Medicare, it certainly does not affect at all. So there are a lot of wonderful ways to use the reverse mortgage. Purchasing a home, I think, is one of the most creative ways. I see people sell their homes in the Northeast and move to Florida. I see seniors selling their homes in Los Angeles and moving to the desert. If you have, let's say you have $150,000 proceeds from the sale of your home in the Northeast or your home in Los Angeles or wherever you may live, if you have $150,000 in cash proceeds, you think, what am I going to be able to purchase for $150,000? I don't want to have mortgage payments. Well, you can purchase a $300,000 home because, as I mentioned earlier, you're going to put down 50% of the purchase price of the home, and the other 50% will be financed in the form of a reverse mortgage, upon which there are no payments that are expected or required. So that's terrific. If you want to find out if you're eligible for a reverse mortgage, how much money is available to you, how you can get a quote, what are the terms and rates, or can you use a reverse mortgage to purchase a home, feel free to call me. I am here to be a sounding board for you or just another resource, and I can be reached either on my toll-free phone, which is 888-740-9573, or by email. And I'm always here for Renee's clients, and I love working with them. So I am happy to discuss individual situations, and I hope that you have gotten a good overview of the reverse mortgage program. And any questions you have, please feel free to reach out.
Excellent, excellent. Thanks, Janice. And as always, so many people have had negative thoughts. I love the idea that you've done this myth and address that, because there have been so many comments that I've gotten back from people saying that they've heard from other people who might have gotten a reverse mortgage, years ago, and it wasn't a good experience for them. But, at the end of the day, the laws have changed, the regulations have changed, and the fact that now, particularly, in California, for most people, their homes is really their biggest asset. And so really being able to tap into that, if you want to continue to live in your home, what's the best way to do that? And to your point, even if you have long-term care coverage, it may not be enough to cover, having someone in your home 24/7. So, having a backup plan. So I have a couple questions. So let's say somebody does take out, a reverse mortgage. It doesn't mean that you have to start pulling from it right away. It can just sit there for a few years, and then you can
absolutely.
Okay. And then it does go up.
It increases every year. And in fact, I do have clients who called me in the past few months to say, wow, my investments are really looking bad, and I have the reverse mortgage line of credit that's been growing over the past several years. I'm thinking maybe I want to stop taking out some of my investments that I have under management, and rather let me use that line of credit a little bit now so that I can leave my assets in place, let them come back up when the market is more stable. And it's a great approach. It's a great strategy.
Absolutely. That is fantastic. Fantastic. And as everyone knows, just one last question before we close out. What's the length of time? Let's say somebody reaches out to you, and I know that you go through some initial stages and provide, quotes in content about, this is the value of your home. Can you talk a little bit about what is that process? How long does it take before someone, if they start the application process, how long does it take before it gets finalized?
Well, I would say realistically between 4 to 6 weeks. There are several things that have to happen before we can even take the application. First thing would be that third-party counseling with the Department of Housing and Urban Development. So that's going to happen first. Then an application where we go through the entire package together and collect signatures, some documentation that we need, copy of your driver's license, copy of your social security card, bank statements, homeowner's insurance, deck page, things like that. And then we order an appraisal. Right now, just for your information, I think it's kind of interesting. Some of the appraisers are offering to do drive-by appraisals for seniors who are really not comfortable with having someone come into their home. So that's terrific. And in fact, I have several clients who are taking advantage of that in a really good way. So from start to finish, I would say about 6 weeks from the time you get your counseling. About 6 weeks, 4 to 6 weeks.
Awesome. Awesome. All right. Very good. Well, thank you so much for taking your time today. And I am sure, as everyone can see here on the screen, if you want to reach out to Janice, and every time she's done, this is probably your third or fourth webinar you've done with us or podcast, there's always somebody that reaches out, at least a few people.
Yeah.
So please feel free to reach out and engage her. And again, thank you very much for your time. Everyone, enjoy, stay safe and secure.
Healthy and safe, everyone. Thank you. Thanks so much for having me as a guest today, Renee.
Absolutely.